How do you think this is going to play out over the next year? Are we going to see what's going to happen with Core Scientific? Are they just going to renegotiate? What's going to happen with all these other large public miners? I don't know the state of them all, but
yeah. So it's those that have the lower the debt load currently, the better the miner is positioned, because as I mentioned, they can mine profitably. They will produce free cash flow at the end of the month. If you plug in an S19 at Riot or Corsair, it's the amortization schedule of the debt that's going to be the issue, the killer. So anybody that has high debt is in a very precarious position and is probably going to need to renegotiate some of that load. The miners like Riot has a very low debt load, Clean Spark very low debt load, and so those types of miners they're also well positioned to accelerate through this because they are producing free cash flows, means they can reinvest, that sort of thing.
And some have diversified their income streams.
True. HUD 8 also has diversified income. So they're trying to do like high performance compute and things like that, which make a ton of sense because really at the end of the day, most miners are really reminiscent of like an energy company. They or a traditional data center. And so as long as if they can monetize the input with some margin, they should be doing that. And if there's a higher margin activity they could be doing, like doing high performance compute or switching to a traditional data center, that's something that it makes a lot of sense for them as a business, especially as Bitcoin margins go down.
So back to your internal discussions about the halving. Yeah, could we see bloodbath in the mining industry if we don't see price recovery?
So over if we don't see a bit of relief from specifically hash price, dollars per terahash or petahash over the next, I would say over the next 2 to 3 months, that's when we're going to reach, it'll be max pain for anybody that has a mining loan. And these mining loans, another really interesting note is that most of the mining loans, they won't lend over, the lenders won't lend over the halving. So most of the notes, they won't lend over the halving because the economics, that is such like a big, unknown. Yeah, that's such a big economic event. It's impossible to know, is my mining loan going to be, like, am I ever going to get it paid back? So they won't lend over most of them will not lend over the halving. So that means we're kind of in this, we are unwinding, right? So leverage is unwinding. Every month that goes by that a miner doesn't, default, the amount of leverage in mining is going down because, they're paying down one more month of amortization. And so, as that progresses, we are slowly unwinding. But who's going to, is somebody going to capitulate before that? We'll see.
There'll be some interesting distressed deals, perhaps.
Yeah, there's some big batches of machines that are coming across our trading desk, and we're seeing pretty aggressive pricing on them.
So give me an idea of price.
15 a terahash.
What does that mean for a price of an ASIC? What can you get an S19 now?
$1,500.
Fuck, I paid $10,000 for each of mine.
So
is that? And do you think that's a good buy?
So you can look at it from an ROI perspective, and that's actually Bitmain will most likely, so this chart actually is, we try to normalize this across a lot of different models, and so it won't show like.
Just explain this chart to the people listening.
Yeah, the chart that we're looking at here is the ASIC index, and this is like I mentioned, we produce this reference rate daily for a tranche of machines based on their efficiency level. So the lowest there, the red line there is that's the most efficient machines, under 30 joules per terahash. Right now, like I said, the J Pro is, I think it's 32 joules per terahash. And so that's like the reference rate. I don't know, can you click on there and see what it shows?
Can you go up a touch, Danny?
Yeah.
Go up to all. I just want to see, so they do go up as well.
Oh yeah.
Because we were only seeing,
absolutely.
I tell you what I'm thinking. These might make a good investment.
To buy and hold or buy?
To buy and hold the machines themselves. Because, if you look there from, October 21, what's that? That was like a 400% increase in the...
So the bottom line is actually, the top line, bottom line here is actually S9s. S9s in the last cycle, that was the Bitcoin beta play. S9s were effectively free. During during summer of 2020, people were selling S9s for scrap, $20.
I had 70 of them.
We talked about.
I told you about
140 of them.
Yeah, well, the 70 were Dragonmints.
Yeah.
So even when I actually sold my S9s, nobody wanted the Dragonmints. The Dragonmints literally were $30 for scrap each.
And That was only if they came with the power supply, because I need that power supply for other machines, because you can reuse the power supplies.
Yeah, but I'm trying to remember what I got. I want to say like $200 a machine or $250. But I'd been previously offered $30, and I just hadn't got around to saying to the guy, like, yeah, get rid of them.
Yeah.
And then somebody approached me and said, have you got any machines? I said, yeah, I've got 70 of them. So what I'm thinking is like at the end of the year, we're coming to the end of the year. I've got a profitable podcast. I've got some money in the bank. If I don't spend that money, I have to pay corporation tax of 19%. But if I buy these machines, then I don't have to pay corporation tax, because that's capital investment. It's spending your profits. So would it make sense to say I don't know, say I had $150,000 profit.
Yep.
Should I go and buy 100 of these machines?
Yeah.
Because that could be next year. They could be a 4x.
They could be. That
could be worse.
Could be worse. Yeah. The like I said, so the S9 was the beta play. You could buy them for effectively $20 a piece, and then they went up to there were some of them selling for $800-900 at the top. So
yeah, maybe I got like $700
in the pod you said $6.
Was it $6? I can't remember.
But anyway, so looking at
so what's the play this time? What's the play machine?
So it's really hard to determine to claim that right now. So or make the claim about, is it a good investment right now? And the reason being is that we don't really know. You don't really know where hash rate's going, and the unknowns of hosting right now are really probably the biggest concern. It's hard to find good hosting because they're really constrained. All the big miners have gobbled up the space, and so if you're looking for hosting options, you're generally looking at small, potentially unexperienced operators, and
what if you don't want to host them?
I mean, there is margin to be made. I guess you could put them in your garage.
Can you not hold them for me?
I have a warehouse, yeah.
Yeah.
But we can hold them.
I'm just wondering, that's a good investment. I don't know.
Traditional wisdom would say no.
Okay.
But that doesn't mean that if Bitcoin goes on a run, it's a high beta play. I mean, the value could be zero. And if hash rate continues ripping, hash price continues dropping, and a J Pro becomes unprofitable at 10 cents, the value of those is going to be evaporated.
Down to what?
They're $1,500 today. People would probably be trying to get rid of them for a couple $100.
Well, then it does.
Yeah, I mean, it would trade very similar to the way an S9 did, and that
you could buy 100 machines for $20,000.
And I mean, that's what people were doing that in summer of 2020, and some folks were warehousing them. And so, if a J Pro got down to $6 or $8 a terahash, you'd probably want to start thinking about it, because that would be $600 or $800. But it's really hard to say what's going to happen with hash price, what's going to happen with these XPs, and it doesn't, Bitmain, one good thing for miners to look forward to is that Bitmain did not release an exceptionally more efficient machine this year. They did last year, which was the XP, which increased efficiency by about 30%. And so that means if you had S19, if you had J Pros or 19 Pros or any of the S19 series, that you were going to be, now competing with a miner that was 30% more efficient. So that there obviously reduces your incentive to buy some of the later generations. But now we're seeing that, okay, they're only going to produce the XPs for the next year. And so I at least know where the floor of efficiency is. And if I can maybe, play games with that, or I can make an investment around that, that might make sense.
How much pressure does this put on the likes of Bitmain themselves as well? Because,
so Bitmain made a really big gamble, they made a really big push into what are called the hydros. And that is a machine that comes purpose built for liquid cooling. It's, if you've ever seen a gaming PC that has those,
seen it.
those hoses on them, they're like that. It's not immersion, where immersion you put the whole machine into some liquid. This one is actually just has the hoses go onto the chips and cool it that way. They made a really big push into those, and I was at WDMS a couple of days ago in Cancun, and that was the message. They want to sell XP, they want to sell hydros, they want to sell XP hydros, and they think that that's the way to go. They made a really big investment, and we'll see if it pays off. like you said, it does put a ton of pressure because there's not a lot of people buying new machines right now. There's no capital to invest in them. Given the events of last week, there is no new capital coming either. So if you don't have money to go buy machines, the person that produces those machines is definitely going to be feeling some pretty major pressure. They're doing a lot of creative things to get machines off the shelves. That looks like subsidizing miners. So if you have sub 4 cent power, they'll give you a 50%, basically a 50% LTV, but it's machines. They'll give you machines at 50% cost, and you have to mine with them for a certain amount of time to effectively pay that back. So they're doing a lot of creative things like that, and there's a lot of companies that are doing other similar creative things.
Huh. Should we buy some miners, Danny?
I'm not sure. Sounds like a sketchy play.
Yeah, sorry guys. You definitely cost averaging here may not be a terrible play. That's where a lot of folks are buying in smaller quantities. The quantities and volumes that we've seen, actually, we started to see volumes tick up in our, we do a brokerage business where we help miners that need machines acquire them, and we saw volumes start to pick up, towards the end of Q3, in early Q4. Most of Q3 was effectively dead. There was nobody investing in new mining machines because the value of them was in a free fall. You can see from the chart there from April to end of July was just basically a vertical line down. But then we sort of reached a little bit of a plateau, and that was when volume started to pick up, and that was when people felt like they could reinvest or start making investments again with a little bit more certainty.
Do you think the Intel machines are going to disrupt this at all?
No, not right now. They're just not efficient enough yet.
Okay.
But I do think that if Intel continues to invest in this market, they will reach parity with the Bitmain machines. And the reason, so Bitmain pretty much has a stranglehold over I shouldn't say stranglehold, that's rather negative. They're competing at a really high level. And the way that they're able to do that is because of their relationship with TSMC. They get allocations that other people can't. They're able to produce more chips and more machines that other people can't. So that's the reason they're able to continue to hold such a strong position in the market. WhatsMiner would be second place. They get a lot of, they're able to produce a lot of machines, just not as much as Bitmain. Intel, though, since they own their own production, they would be able to go out and compete with Bitmain head to head on a volume basis. They would be able to produce enough machines. The only thing that's holding them back now is they just need to get to that efficiency level that it makes sense.
I talked about this on the show the other day. Everything is kind of a derivative of the Bitcoin price. We can see it there, 100%. Right? It's exactly the same for our business, which is just a podcast, 6 people making content. But our downloads, you could have a line there for our downloads, and it would kind of track the Bitcoin price.
Okay. Well, there's a Bitcoin price on this, so you can overlay it.
Yeah, I mean, ours would quite similarly follow that. I said this on the podcast the other day, what I don't understand is why people are not preparing for worst case scenarios. We conserve capital. We produce a good show and we invest in the show. But when we're profitable, we put money by. We have to create a runway. We've got a runway that protects us for about a year. We always want to be a year ahead. So if the market crashes or there's not enough sponsors about, we know we can keep making our show. I don't have to lay people off. We're protected. Now, there's a lot of people involved here in mining who've been involved in Bitcoin longer than I am. They know this, and I don't understand why they have not prepared for these worst-case scenarios. Well,
they were. I think they were trying, but the problem is this just happened too quickly. And so they, like you said, this time last year, most profitable time to mine ever in Bitcoin. People were shoveling money in as quickly as they can. Less than 12 months later, it's the least profitable time to mine ever. It's very difficult to make massive strategic pivots in that amount of time.
Right. Okay. And how much do you think this? There's been multiple things that feel like it's been hit at multiple angles. The increase that you got an energy cycle, as you've mentioned previously, and then you've got a complete collapse we've essentially had 3 Mt. Gox in the last 6 months.
Yeah.
Which hasn't really helped. I wonder where the price would have been. I wonder if what 3 Hours Capital were doing, FTX and Alameda were doing, was actually depressing the price. I wonder if none of that had happened, whether the bull run would have gone on longer and we would have settled at a higher price. I just don't know. But I have a feeling we got fucked by frauds.
New capital is delayed significantly now as a result of everything that's happened over the last 6 months, even more specifically the last week. New capital coming into this industry was sitting on the sidelines, may never come into this industry as a result of what happened over the last week and even 6 months.
Could that be a good thing? Do you want my reasoning?
Yes.
It could reduce the volatility. In that massive amounts of capital comes in very competitive market where you can see insane returns in a very short amount of time, and then you see all these capitulations. Could it be that a more kind of like a proof of work, a harder proof of work to create businesses in this industry will create better, more stable companies?
CZ said potentially one of the largest exchange and hopefully liquid exchange said that cost of capital, we shouldn't be thinking about cost of capital. You need to maintain reserves. You need to be thinking about how can I keep a low leverage in this market because of the volatility. And I think that by adding in, like you said, all this new capital flowing in quickly, that becomes very attractive to lever that up. And that's when we get these big deleveraging events that we're seeing now.
It's the Ray Dalio's cycle on crack.
Exactly. Yeah. And again, poor miners are really bumping into two cycles that are occurring independent of each other. They are dependent on both of those cycles, but they're coming together at the same time. Energy and Bitcoin cycle. If we could go back to that chart, I wanted to show one interesting thing. The hash rate, the rig index with Bitcoin price. The interesting part here. So if you could put the Bitcoin price there. So Bitcoin has actually been rather flat since early July, right? You can see relative, there's been some bits of volatility there. But the very interesting thing is the price of machines continuing to go down. That is a direct result of the ROIs. Yep, the ROIs on those machines. Oversupply, ROIs. Hash price continues to go down. Hash rate continues to go up. That's what's causing those machines to continue to go down. Now, we saw another big leg down here. We'll probably see a leg down in machine prices, but I think machine prices are getting back down to their reasonable levels. And I think that if you start doing some ROI calculations, we'll start to see a pretty reasonable price for machines here over the next 3 months or so.